Ladies and gentlemen, good day and welcome to the Insecticides India Limited conference call for Q3 and 9 months FY23. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. From the management, we have with us Mr. Rajesh Agarwal, the Managing Director, and Mr. Sandeep Agarwal, the Chief Financial Officer of the company. Before we begin, I would like to mention that some of the statements made in today's discussions may be forward-looking in nature and may involve risks and uncertainties. A detailed statement in this regard is available in the earnings presentation shared on the exchange today. We shall start the call with the opening remarks and then we will move to the Q&A session. I now hand the conference over to Mr. Rajesh Agarwal for the opening remarks. Thank you, and over to you, sir.
Thank you, and a very warm welcome to all the attendees of this conference call. On behalf of Insecticides India, I, Rajesh Agarwal, Managing Director, extend a heartiest welcome to all the attendees of today's earnings call. I'm extremely pleased to present before you the quarterly and 9-monthly financial results of the company ending on 31st December 2022. Let's begin today's discussion with a brief outlook of the agrochemical industry, followed by a synopsis of the company's financial performance for Q3 and 9 months 23. Looking at the current international trends post-COVID and the Russian attack on Ukraine, the international scenario looks in favor of our country, and I believe that it's a huge opportunity for our country to produce and make it for the domestic market as well as the world, because I believe that with more than 70 crore people in the age of working, in the working age today, and if we look at 2050, India will be one of the economies where the number of workers are going to go up from 70 crores to 90 crores, which means that there is a huge opportunity of working in India. There will be a lot of domestic demand, and of course, a lot of stomachs to feed. So if we look at the data, the broad data, it talks about that the agrochemical sector is going to grow from 2021 to 2026 to 7.4 billion. So which means a huge scope, and this sector has been recognized as one of the champion sectors in the industry, with 12 industries which are going to take global leadership by 50, and 8 to 10% growth through 2025 is projected by 50 also. If we look at the agrochemical region, India, yes, there is increase in the domestic consumption. And if we look at Asia Pacific also, this zone is also the demand for agrochemical is going up, various reasons, because the food production is high, the food demand is high. And if we look at the modernization which is happening into agriculture, so somewhere it is going to go at par with the Western world, and hence there is an increase in the demand for agrochemicals in this area in particular. Today, as I was saying, that India is the next exporter of pesticide in the world. So there are various advantages to our country. Number one, like China plus one policy, which is very, very important, because India is one country which can act as the natural supplier of agrochemicals and the chemicals at large, because it's a low-cost manufacturing base. There is availability of technical manpower at aggressive prices. Seasonal domestic demand is one of the reasons, because there is overcapacity due to the cyclic nature of business, and of course in the better international market sometimes you can get better prices, and since India is very, very strong into the generic products, so there is a huge opportunity. In the recent time, in 22, government has launched the Kisan drones for the crop assessment, and it has been eased out, which means that there is a good opportunity to spray the fungicides and insecticides which the government has allowed, and the companies are starting deriving data, and we are also working in a big way that how we can take these drones to the market, and we are working with various drone companies, and we are working with our farmer and our network to take this technology and make it more commercial and practical for our farmers at large. Today, the potential of agrochemical is huge, because despite of whatever usage is happening in India, though I believe that the usage is still very low, because if we look at the world market, India consumption of agrochemical is just about 5%. So 5% I can say of agrochemical is percent population of the world, because our food production is not only good for our country, which is about 18%, but we are also exporting many food products, which means that there is huge scope of agrochemicals to go up. And even if we look today, 15 to 25% of the potential crops are wasted due to the attack of pests, weeds and diseases. So that is available in all government data. So talking about the first half of this year, the monsoons were very, very erratic. So very challenging times, because in certain areas it was excessive rainfall, whereas few areas normal, but deficit in many areas. So this erratic nature has led to the loss of sprays in many parts of the country. And then there was delayed monsoons, which again delayed some of the crop sowings, like rice this year got impacted by 4%, pulses by 6%, oilseeds by 2%, coarse cereals increased by 5%, cotton sowing increased by 6%, but then there was huge pest infestation, this black thrips, sometimes something which is not getting the proper control, so there are issues. But overall, it has been a decent year basically, because if we talk about the Rabi season showed a good recovery, and particularly southern part of the country has shown a good recovery in the Rabi season. Why? Because there has been good rains. This good rains has led to the good water level in the reservoirs, and the soils are wet, which means that there has been good opportunity. And if I talk about the current Q4, even in Q3, we see that B2 sales, the maximum sale has come from south. More than 50% of our business in this B2C segment or brand segment has come from the southern zone only, and rest of the zones have been just the fillers actually of another 50%. So there is a good opportunity for the products, good in demand. Like if I talk about this 9 months this year, we saw that the products which we have launched recently in this year and the products which were launched in the previous year also, we have seen a good jump because they were the part of our focus product range. And particularly if I name Shinwa, product like Hachiman, product like Izuki, which was launched this year, Tori. So all these products have shown a significant jump year on year, and they have been responsible behind getting a better market share for Insecticides India into the market. So talking about the company performance in particular, this quarter was a modest quarter in terms of the financial performance as well as the market acceptability of the new molecules, because the Kharif season was at the 7th and it was the beginning of the Rabi season, which was delayed due to the impact of the monsoons. But I believe that it is going to make up in the fourth quarter, though this has been a positive quarter for us, because if we talk about the top line, 356 crores has been the total sales, and EBITDA has been 232 crore. If we talk about sales, which is 13.6% higher than last year, and EBITDA is 25% higher than the previous year. So if we talk about Q3, it is 60 basis points of jump in the EBITDA. And if we talk about 9 months, then roughly in 9 months we have achieved around 1,500 crores of sales and about 150 crores of EBITDA margin, which is 107 basis points increase in 9 months. So in Maharatnas also we have got a good contribution actually. Though in this quarter it was 133 crores, and if we look at the year as a whole, it is 596 crores. Roughly 55% was the contribution from the Maharatnas. And I was saying Shinwa and Tori and also Hachiman were the main ingredients or the main products which lead to the jump. If we look at the insecticide, herbicide, fungicide distribution, insecticides are the highest with almost 40%, 44%, herbicides 41.6%, and 10% of fungicides in 9 months. If I talk about the 3 months also, the more or less figures are similar. Just the fungicides are little lower at 8% in the 3-month segment. And I was telling, if I talk about the distribution area-wise, more than 50% has come from south, and east, west, and north zone has remained little bit, I would say, slow, and they have contributed another 50% only. And Hachiman and Shinwa in particular had contributed in a big way year on year. They have contributed about 100 crore jump in the turnover, these two products in particular. As I was discussing about Tori and Izuki, these products has also given a good jump to the company. About 60 crores have come out of Tori and Izuki put together, the jump year on year. If I talk about the 9-month sales, roughly 70 crores have come from Tori, And Izuki, we got a very small window to market this product. About 12 crores has come out of it, and we are expecting further little more sale. But all these products are going to rise in the near future in a big way. So this year, company has given the bonus in the ratio of 1:2, and we have a very stable credit rating. The credit rating has remained same, and in this quarter, Q3, we had launched a product called Stana. A decent beginning, and I would say that this product is again going to multiply in the next year. We have decently sold some quantities, small sales, roughly about 4 odd crores. But we made a beginning into this grape segment with this product, and it is going to contribute in a big way for us in the near future in FY24. Talking about the capex, so first of all, I will discuss about the L&T project. So here the capex was planned at about 110 crores. It has, against the budgeted figures, it has gone up to 160 crores. Various reasons. Number one is delay, and number two is the increase in the cost of steel and some other materials actually, which has led to the increase in the project cost. And we have also planned to introduce 2 more boilers actually to have a solid fuel here, so which has also led to the increase in the project cost for the site. So this project is expected to commence by March 23. So which means that all our capital expenses or the projects will be completed by March 23, the running projects. So for the cost saving, we have put up 1 megawatt solar panels at the Dahej site, and also 200 kilowatt solar panels are put at the SEZ site. And also, as I was discussing, the solid fuel we will be using instead of gas, which will be a big saving, because with the increased plant, the consumption of gas or the consumption of steam for the company will double. So the only way out to keep the expenses under control is solid fuel, which runs at almost half or less than half cost of gas actually. So that's the vision actually. We should be able to introduce these new boilers by the end of March. So the project will complete at this time, and the new boilers will also start. So which means that keeping the same expense ratio, we will be able to maintain, do more production, which will lead to savings for the company. I would like to talk about Rajasthan. In Rajasthan, we have completed our project, and now we are coming up with the new site in Rajasthan. We have bought one plant in Rajasthan again, because we believe that proximity to Delhi and on the highway, it is going to help us in a big way in consolidating our formulation facilities. And not only the formulation, there will be scope of setting up the new R&D centers, because we have started one new company, IL Biologicals. So the R&D center for the IL Biologicals will be made here, the plant for the IL Biologicals will be made here, and also the plant for insecticide area will be made at the same site. It's a large site of more than 15 acres of land, and this will come into the possession of the company in the month of March. And we propose to start the phase 1 of the site very, because it's a constructed site, and we are going to start with the formulations and some biological activities, and later on in half 2 or phase 2, we'll come up with the technical synthesis plant here, which will be a 2-year project again, but that will start after some time actually in the later half of 2023. So first we will complete our both the projects and start taking the advantages out of the Dahej site and Chopanki site. Then we start this Darod site, which is a new site for the company. Talking about the Maharatnas and Focus Maharatnas. So as you know that we have 11 products into Focus Maharatna segment, and these products have contributed well, and if you put together Focus Maharatnas and Maharatnas, more than 55% of the business so far has come out of this segment. And I believe in the last quarter, we are going to put more emphasis on Maharatna products, particularly both on B2C segment as well as B2B also, and I expect a good jump into the sales of Maharatna segment, and also a good bottom line due to the, I would say, increased sale in the B2B segment out of these products. So we are getting very good response and very good order books for some of these products, and this is going to support our quarter 4. Talking about the future outlook. So overall, if I sum up the year FY23, I would like to say that the top line will be the double-digit growth, and similar will be the bottom line. We should see a better result in Q4. The EBITDA growth which we have achieved in Q3, we'll try to maintain that EBITDA growth. And there will be some decline in the export target because export I was keeping always at 150 crores, but there have been various reasons which has hit the export market. Number one is the depreciation in the various currencies and non-availability of dollars, which has impacted many countries who are our customers in Africa, Middle East, and Latin countries. And also CI, we are finding paucity of dollars, and due to non-availability of dollars, we are not able to supply to them. Some people are maintaining the balances in their banks, but the banks are not able to honor the LCs or pay the payments in advance what they are supposed to give. So we have suffered a little on this export front, but I believe that we should be able to make it up soon. And this year we may close the export sales around 110-115 crores, giving a hit of about 30%. But I can assure you that next year we should cross 200 crore plus in the international market because of various reasons actually, not only the registrations of some of the products which we are getting into these markets, but we will have some registrations of technicals also into the advanced markets of Latin, Europe, American, some countries. So this is also going to give the push to our export sales. And we also looking at the opportunity of CRAMS coming into us in the export market, which will again strengthen our business into the international market and give a good boost to the export business also. So for the next coming year, we see the strength in our B2B business because the introduction of new plants, and with these new plants, we are also going to introduce new molecules. So these molecules will also go into B2B segment parallel to B2C. So I see the growth coming from B2B, B2C, and export front, all the sectors in the next year. And we will, again, with the expansions coming in, I would like to keep the target of 25% growth for the next year also. So here, the new products which are introduced in the recent 2 years and the new introductions which are going to come now, because still we have the plan to introduce 4 more products into this month itself, in the month of March, which is Mission, Sergeant Express, Tornado, Bouncer, not Sergeant Express, it may be read as Supremo SP. So these are the 4 major launches with Mission as the Granule come up with the liquid formulation of this product, Mission, which is the number 1 insecticide in the country selling today. So we are coming up with the technical manufacture of this product and we will bring the formulation to the market. It is going to be the part of our top 6 products and we expect a good jump with this product sales also. So at present, Shilva in 23 will be our largest product, which is a Japanese patented molecule, and we are expecting to go close with good numbers in this product. In the next year, again, it is expected to multiply along with some other products like Tori, Hachiman, and some other, like we have selected 6 products which are going to do good in future. So I have very good expectation from Q1 itself of the next year 24. And I'm very, very confident that with our focus on the Maharatna products and focus Maharatna products, we shall be able to deliver the good numbers as per the expectation of the state. So IL Biologicals will be doing good and we'll be introducing various products under this segment. And along with this, in the Rabi season also, with some of the products like Shelva, Tori, we will be getting some sales and some gold products also will be doing good into the season. And there will be launches, as I was discussing, these 4 products. So this some quantities of these, particularly Mission and Tornado, Bouncer, some quantities of these will also move to the market and will help us in building up the sales of Q4. So we are also working for import substitution. If I talk about the Dahej expansion, there we are backward integrating, particularly for our 2 technicals, namely lambda cyhalothrin and thiamethoxam. So we are going to make the intermediates for this product, which will strengthen our technicals in the international market. We have already increased our capacity, almost doubled our capacity of manufacturing these technicals at Concall plant. And now once we start manufacturing the raw materials for this product, which will strengthen and our capacities and capabilities into the market and will give the confidence to the international market of our consistent supply, quality supplies, and is going to help the company in a big way because we have generated a lot of data for these molecules and this is being registered in all the advanced markets for the world. So our export gets boosted when the new technicals, like we are investing a lot on registrations, not only into Africa and Middle East, but also in Europe, Brazil, NAFTA countries and the Latin countries, Canada, etc. So a lot of these markets are going to become our new markets actually, and we are going to go further away from Africa and Middle East, like Europe, Brazil, Latin countries. All these countries are going to support us in a big way. So the export revenue for this year, yes, from 1,500 million, it has come down to 115 million, the projections. But we are going to make up in a big way for future. Meanwhile, we are going to continue our focus around the R&D, because in the R&D, we are doing various types of things. One is the biological R&D, second is the chemical R&D. In the biological R&D, we are going to introduce some more products, so which are going to come in the biological. So there will be 3-4 expectation. We can products launch expectation we can do in the biological segment, and similarly in the chemical segment, there are certain mixtures which are getting the registrations, and all these new mixtures and our new products will be coming soon, where we are going to make certain new technicals, AIs, and where we are going to launch certain formulations. So all these are going to give a good edge into the market, and these launches are expected in next 3 to 4 months actually. So this is going to happen. And in drones, with drones also, we are going to enter into this Kharif season by for using our insecticide, fungicide, and also the fertilizer. And this new products also are going to support it a big way. So with this, I thank all the participants, and we are open for questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Jatin Padalia from an individual investor. Please go ahead.
Hello. Yeah, Padalia.
So actually, I am an investor and I got shares from my relatives as a gift. So I have a lot of questions to understand about their company. So if I ask a lot, so you may just tell me. So first is, as a percentage of balance sheet, our receivables are very high. So what is the reason behind that? Is that because of our business nature, or you can throw some light on that?
I think receivables are very much under control as it happens in regular years. And even with the increase in the sales, our collections are quite good. And by the March end, the things will look very good actually. I don't see any big threat over there. So our collections so far are doing very well.
Okay. And what kind of market share we are having currently in this business amongst our various competitors?
Actually, it's a difficult number to tell, but we vary somewhere between 4 to 5% of the market share.
Okay. So I see that you are launching new products every year. So are they just extension of your old products, or they are bringing something new? You can explain that by some few example. I heard the call and you tried to explain by using one product also, but I would like to understand in some more detail.
We as Tractor brand pesticides, we specialize in providing the complete solution to the farmer. In the beginning, when this company was launched in 2001, so at that time I picked up everything, whatever was there in the market, and we launched everything into the market, and we kept on increasing our range. Then I realized that we have a bundle of generic products and which are losing their charm, and the new generation solutions are coming. Then we started adopting new generation solutions a decade back. So almost since then we are trying that how we can balance our range, because the number of products are going added up, and it's become very difficult to reduce the molecules. So now we pointed out that all the molecules which are below a certain size, we pointed out the molecules, and we are trying to tail cut about 30-40, more than 40 formulations or 40 brands out of our total range. The idea is the generics which are not getting big share, they should go. But our strength is that we provide the complete solution to the farmer. So we are working regularly to provide the new generation solutions. Now there are 3-4 ways in which I provide the new generation solutions to the farmer. Number one, we work with the Japanese partners and we bring the patented technologies through the Japanese, particularly Nissan. So number two, we work in our R&D center and we backward integrate for the new generation generics. When I say new generation generics, they are the off-patented molecules which are a monopoly in the country. So we make the AI and we bring them at competitive price for the farmer and establish the brand there. Number three, we make new generation formulations. When I say formulations, which means a mixture of 2 or more products or a new formulation which is different than the past, which gives better results to a consumer. Simple example is crocin versus what do you call that? Combiflam, which is a mixture of 2 medicines. So we try to bring a ready mixture for the consumer so that one medicine can give better results. His spray cost come down. The medicine is a scientific mixture. We can bag a IP on this, and this gives the edge into the market. So it's a win-win situation for all. So we bring this type of products also. And apart from that, we are bringing the biological solutions also to the farmer. So these are the 4 ways with which we are bringing the molecule. So when I bring the molecules, for some of the molecules I have to make new technicals, AIs also. So we backward integrate and we make the new AIs also. And in some of the AIs, we are doing the backward integration so that we can reduce the dependence on China. So these are various ways by which we are trying to bring the new solutions to the farmer, and we are continuously working on bringing the new solutions because we want to change the product mix, because now I believe that we have come to a point where there is no use of selling only generic products or only smaller products. So generics which are losing their channel, we are trying to cut them by ourselves and bring the new solutions which have more value addition. Thank you.
Excellent. Now the question is regarding capex. So whatever capex we are doing, that is, I think some capex we are doing to have some backward integration, and some is capacity expansion like that. So I mean, what type of margins we will be getting? I mean, incremental margins and incremental revenue.
There will be, like we have given a projection of 25% growth in this year. We are already 20% plus. We have given the projection for 25% growth in the next year also. And I believe for a few years I will be able to maintain this. So we are trying that by continuous expanding, by launching new products and by doing the backward integrations and making the new AI, we continue this type of growth. So I don't want to give a very big number, but we should continue to grow by 25% for next 2 to 3 years by the virtue of investments we have made, and we will continuously keep on introducing the new technologies which we have developed over a period of time. And definitely, since these will be value-added technologies, so they will support us in increasing our bottom line or bettering our bottom line more than the top line. So that will be the vision.
Okay. And the patents that we have are valid only in India, right?
I would suggest like patents are majorly in India, but some of the patents are also internationally valid. But yes, at the moment we are focusing majorly on Indian patents. We have also a JV which discovers the molecules for the world. So in that case, we are looking for international patents also. So major contribution is done by the Japan and minor is with us. So I would suggest that a lot of questions I have replied to you. You can come back again in the queue, please.
Okay, thank you.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Bharat Gupta from Fair Value Capital. Please go ahead.
Hi, Rajesh and Sandeep ji.
Yeah, hi.
Couple of questions from my side. So,
okay.
While we look at the overall revenue contribution coming out from the B2C space, margins in this quarter has also remained on the muted side. So, just want to understand more on this. Like, can you throw some light, like, what has been the primary reason for a muted margins in this quarter?
There has been a very big impact on the prices in the market because of the market fluctuations. The prices in the beginning were very, very high. Then they became little modest, and still the currency, lot of issues are there prevailing already. The currencies have gone up. The crude was high, then crude is reasonable at the moment. So international markets are highly fluctuating. So due to these fluctuations, we have to give the impact of those fluctuations actually on the inventories and everything. So it has impacted, and Otherwise also, if you look at the second half of the year, it is a small business for us, and it becomes very difficult to make good margins into this business. But still, I believe that Q4 is going to outperform Q3 for us, because we are expecting a lot of good sales of the new generation molecules, which is going to support. And this trend is going to continue throughout the next year, which will support us in building up the bottom line. At the moment, yes, it has got impacted. So I've already explained the international market trend, the pricing pressure, the currency pressure, both have impacted it.
Rajesh, just on the number side, so what would be the rough impact on the currency side, like currency fluctuation? Have we taken any forex hit?
Forex hit is a regular thing basically, because the way we the process in India is that if you do the hedging also, you have to put it in the cost of the currency hit. So our currency hit, what's the exact number? About 13 crores is the currency hit of this year. Actually, we have already made up import of more than 500 crores. So where we have got a hit of about 13 crores, or the total cost of hedging, you can say, plus including the loss in currency, is 13 crores. We are already hedged till March end.
Any colors on the volume growth for this quarter?
Volume, yes, for some products we'll be increasing the volumes. For some other products, there will maybe the fall in the volume actually. So volume is not very important, because it's the value which is very, very important. When it comes to new generation, in the new generation, the volume is continuously coming down and the value is going up actually. So I think that in times to come, or if I look at the 20 years of agrochemical industry, continuously the volumes are coming down, but the value year on year is going up. To give you a small comparison, by 2005, this industry was about just 2 billion, which has not even 2 billion, about 2,500 crores. Today, Indian market is more than 3 billion, and the quantity over this period has declined actually. So continuously, the volumes of the generic products were very, very high. The prices were low. The new generation products value is high, and the volume is low actually. So slowly we are going to low volume products, and as we keep on tail cutting the generic molecules, the volume will continuously keep on falling.
So in the current quarter, like the pricing hikes across the Maharatna, so what would be the figure approximately?
There was no price hike in this quarter. There was an impact. I told you already that the international market was highly fluctuating, so there was some decline. There was no increase in the prices actually. A little decline in certain products as per international adjustments.
Also, sir, in terms of the inventory situation which is there, so how is the situation in regard to the channel inventory present?
I don't see a challenge actually, because some products, yes, the inventory prices have fallen, but that impact has already happened actually, and we are expecting a good season, good start for the new year, because a lot of new molecules. So we have to again rebuild the inventory. So for the new year, we'll have to rebuild the inventory, and that process is on.
Right. Also, Rajesh, in terms of the guidance, like you've given a strong more than 20% kind of a growth for the consecutive years. But in terms of if I look at the margin, so any particular internal target which we have in mind, in order to maintain a particular level of margin?
I don't want to give any exaggerated figures, but I will tell you that if I'm growing by 20%, the margins will be growing better than that. And that will be evident from the first quarter performance itself.
Right.
And this Q4 also we should be positive actually. Year on year, we should be positive in terms of percentage. Let's see.
Right. So our focus is towards improving on the margin, tail cutting the lower margin products, right?
Yes, we are tail cutting the lower margin products, and whatever we are introducing are new generation solutions with better margins.
Right. Also in the presentation, there has been a reference regarding a 93 registration for I think glyphosate, potassium salt, and so just wanted to understand the market size for these products and the applications across the crops.
These are all new products actually for the country. So glyphosate potassium salt will be a new formulation for India. Internationally, it is very, very popular. But yes, we have recently got it. We got the registration in hand just yesterday. So we are going to introduce this product. This will be one of the 4 molecules which are going to come in. Again, there is another product called thiocycline, which we are going to manufacture in the month of March. So we are going to introduce Supremo SP, which is again manufactured in the country for the first time. So glyphosate potassium salt is called Bouncer. Then again, there is Tornado, which is a mixture of two formulations. Technicals we make already, so it will be launched at Tornado. And then the Mission is CTPR, which is the largest selling insecticide in the country. So we have already made the technical, and now we are on the verge of making the formulation. This also will be launched in the month of March. So there will be various launches in March, and even after March, there will be a few launches actually for the Kharif season.
So we are looking to target more than 5 products in the coming year.
Yes, there may be about 4, including the biologicals, another 4-5 products actually may be launched further. And these 4 products are the launches which are going to happen in the month of March itself.
Right, sir. Just last question from my side in regard to the backward integration. So you specified that the work has been progressing, like it has been completed by March 23, right?
Yes.
So, like, what kind of a capital consumption will be incurring from it, and in terms of margins, so will there be a good amount of impact for it, like in terms of our overall margins for?
When I talk about the consumption, like we should be able to make the 100% usage of the backward integrated things by ourselves, and then there will be some products will be sold also. So I'll not be able to declare the names of all the things, but yes, the idea is like some products we consume 100% by ourselves, some quantities we sell into the market. Number 2 is your question about the increase in the margin. So that is very, very subjective because it depends on the market conditions. When the prices goes up, at that time the contribution is more. When the prices are dipping, at that time the contribution is lower. But still that will be positive and it will be very, very helpful in bringing up a stable supply at a stable price. So it will be very helpful.
Sir, it will be curtailing the exposure which we will be having towards China, I think.
Definitely it will be a big help, but at the same time the imports of China is growing because of the introduction of new molecules. A lot of things have to come from China. So I don't see the total overall imports coming down. But yes, this will be helpful, quite helpful.
Right, Rajesh. Thank you so much, sir. Wish you all the best for the coming quarters. That's it from my side. Thanks, sir.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Dhruv Mittal from HDFC Mutual Fund. Please go ahead.
Yes, sir. Thank you so much. So, our question is that some of our new products have done reasonably well. If I look at the presentation that you have uploaded, the 2 products which were launched in FY22, I mean, the products which were launched in FY22 and 23 are driving a decent part of our growth. But coming back to the earlier point that the margins have not improved. So just wanted to, and probably that the reason is because of the high technical prices in the generic, as you mentioned earlier. So if I probably have to, dissect it into your new products that you have launched and the legacy products, is there a trend that your new products are delivering significantly better on contribution margin versus your legacy products? Can that be a reference? And once this technical prices, high prices situation normalizes, we can see that reflecting in your overall numbers also then? Any sense that you can give?
Okay, I'll respond it one by one. It's not easy to establish a new product into the market because it cannot go by price. You have to work with the farmer and establish it. So whatever is happening, it is happening by the strategy, number 1. Number 2 is we talk about our classic products actually, which are a hit in the market. They are always a hit and their number is also going up. Their sales is not coming down in terms of number. If we talk about the volumes of all the classic products, which are more than a dozen, it is going up year on year. It's not coming down actually. And it's only us that we are not increasing the sale of certain things, then it is under control. Otherwise, there is tremendous demand. We are not killing those products. We are killing the other range of products, which are, number 1, not delivering quantity. Number 2, not delivering margins. Number 3, they are not being lifted from the market. So only those products are being cut. So this change in market has already started coming for last 3-4 months actually, and the change in inventory because M2M adjustments you have to make is already happening into the market, and that impact is already happened mostly, I believe, in our inventories. So due to this, the overall margins look little impacted. So there is no risk which I see because already the low cost inventory has started entering into my system, and since it is there, so the prices have rationalized, and we believe that the new season has to be a good season. So it is by strategy and by choice. It's not automatic actually. The new product alone cannot go till you put a full pressure. So since you have worked so hard, you have spent 5 years to 10 years on bringing a molecule, And after investing so much money, and if it is a good molecule, if you don't work for that, then you are not doing justice with that. So this comes with very hard work and very big efforts actually of years of scientists, the teams and marketing team, development team, sales team, all the teams have to work hard, then only the molecule gets established in the market. So nobody can say that you had the product, the products are gone, now what's the situation, now new molecule coming in, the new molecule is taking the share. So these are sheer something which competitors talk about actually, and nothing more than that.
Sure. So, yes, sir, but I was also trying to just understand, say, your new products probably will be delivering better on margins because they are...
Definitely, but you cannot cut down the small products.
Yeah, no,
So
sir, I'm not asking
if you are maintaining a ration shop, you can't say that I'll stop selling sugar, I'll not sell salt. You have to sell it.
Sir.
So the large selling items, you have to specialize in the large selling item like lethal. Lethal is my key brand actually. So I'll continue selling lethal and keeping making the variants of lethal, and I'll continue doing it even at a smaller margin. But the new generation things which comes at a margin actually. So I'll do with those molecules also. So we'll work at generics with the generics at one range and specialty at another range, and we'll keep on increasing both. Yes, please. Your question.
So I think my question got a bit misunderstood. So what I'm trying to say is that you're launching a lot of new products, and some of these products are patented also, so they will deliver higher on margins. But the benefit is not probably reflected in the current quarter or last 9 months number is because of the impact of higher technical prices in some of the generic products, which was there because of the inventory issues and all those things. I'm just trying to understand a better way to understand this will be probably is if I can probably get some sense on what your contribution margin will be on some of the newly launched products and the ex-newly launched products, because next year when the technical prices are everything normal from China, technical prices are normal.
We talk about that generally when it is focus Maharatna products, the margins are to the tune of like gross margin I am talking about 35% plus. In the generic sometimes we sell at 5% margins. So these are the gross margins actually. So that difference is very much there.
Got it. Sure, sir. That's helpful. Thank you so much and all the best, sir. Thanks.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Rohan Gupta from Nuvama. Please go ahead.
Rajesh, has a good evening and thanks for the opportunity. Sir, the question is same in the line of margin and margin profile. I think that your presentation says roughly in 9 months almost 400 crore kind of turnover on a 1500 crore turnover would have come from the new product launch. That roughly good 30% kind of numbers are. I think that this probably will be the best mix in the industry in terms of the revenue contributed from the new products. Despite that, sir, once again, I'm harping on the same issue. Despite that, this is not getting reflected on the EBITDA margins. So just want to understand that do our strategies are like in terms of even the launching the new products, they are in a generic and compete with the many other products already in the market, and where the pricing is not higher or significantly higher than the existing products in the market, or we have to just only compete in the market and keeping the prices low. That's where even the new products also the margins are more or less in line what we get in our existing product basket. It is something so.
Last year what has happened is like the new generation molecules, we had to early sell a lot of products at a very expensive price because that was the situation. We got registrations at last moment, very small market, very small window, and we were forced to do that actually, which kept on which led to a very high cost of some of the products. Some other generic products also, the prices in the market were very, very high and we were forced to buy at those prices. So last year my purchase cost was relatively higher. And this year we are trying to keep it under control, and this is going to help us in building up the margins for the new year actually. So this year buying has been at much better prices than the previous year. So this is going to support in building up the margins.
Okay, so basically you are saying that the raw material cost has been pretty high and that has restricted our margin.
In January last year, December, January, February, the cost of raw materials was very, very high and we were forced to purchase at higher price. And now this year purchases, whatever happened after Diwali, they are at very aggressive prices. So this is going to help us.
Okay, so that is one. And second is in terms of in general trend also we have seen that the revenue contribution from the new products. So when just clarifying your presentation, so there should we assume like that the 400 crore rupees revenue which has come in 9 months, it is all the products which we have launched since FY13, or it is only like in the last 5 years, or how you track it? Like, what we see that the products are in the blue shade, that, FY19, the revenues from the
I don't have the color sheet. Like this sheet shows the years. We are very, very clear in the years. This shows the product from FY19. If we look at the FY19 products, there is hardly an increase year to year. It is a decline. If we look at FY20 products, again, last year it was 55 crores. This year it is 48 crores. The increase comes from FY21, 22 and 23 products only. So these colors are very, very evident actually. So
right. So what we should see, that the blue color, I mean, that probably the products launched in FY19, that they have plateaued now, and there is no incremental growth coming from those products.
This shows that denotes the color actually. So the major increase in green and orange color, which are on the top. So orange is this year launches. 103 crores has come from this year launches. 117 has come from last year launches. Last year the sale from these products was 24 crores. This year it is 117 crores so far.
So what I want to understand, that when in FY20, when we have launched a product with an FY20 revenue was 30 crore. The growth in the next year should have been exponential growth, or should go on at least next 3 to 4 years. But it just plateaus at 30 crore and 43 and 55 and 47. So
Rohan, we cannot generalize anything. It depends on the product. What's the product? What's the response? How it is doing? So I don't have the product name handy. We can discuss about it specifically. But now, like if I talk about this year, so for last year we had launched 2 products. Both are big products actually, and they are going to increase further into the next fiscal again. They are going to go up. Thereafter, they might stabilize. And 2 products which are launched in this year, they are going to go up for at least 2 years again, and then they might stabilize. So can't say, because now
this year has been fantastic in terms of the ramp up of the revenues. Like in both in green and orange, there has been significant ramp up of almost 220 crore kind of revenue has come from the new product.
I see. If I talk about because these products I know, so I see the increase in the revenue coming in the next fiscal also for both these colors.
Okay. And even the raw material costs have now normalized, so we should be seeing that the contribution.
This normalization of what it has led to, because I have to mark MTM, because when I am purchasing the cheaper raw material, and if I have got the stocks of higher price, then I have to make that adjustment. So that adjustment has already happened sheet, and it gives the opportunity for making money in future. Yes, because it is all M2M losses. They are not real losses,
Correct. So one is that higher raw material cost, and second, you mentioned that 19 crore is a forex loss, right?
Forex loss is 14 crores, not 19 crores.
14 crores, sorry. So 14 crores is a forex loss, and a high raw material cost that has also impacted our current year profitability, which shouldn't be the case going forward in FY24. Am I right, sir?
Yes.
Okay. And sir, the 25% revenue growth which you are targeting, I believe that is coming from the further new product launches, or we are still seeing that on the existing product itself there is a good juice available, and also in the export market. So all these things are
all products which were launched in the last year and the products which are launched in this new year. There are certain hero products. We have selected 6 products for the next year. So out of the 6 products, there will be a few, one launch only which is going to come. 5 products are already launched into the market in the 2 years actually. So all these 6 products will be the focus products for us in the next year. And these are going to contribute in a big way for us in future. So at least for the next year, we have very high targets from these 6 products. So 6 we take as a champion product.
Right, sir. Sir, a broad idea in terms of the margin difference in the new products, like the 6 products or the 0 product in FY23. What could have been the gross margin difference?
When it's a focus Maratna product, the gross margin are 35% plus. And when it is a generic product, the margin are 10% minus, or 10% plus minus, I can say. Because in everything and at every stage, it can't be the same. It keeps on varying.
So you are saying that I mean, beyond these products, the top products, top Navratna, our gross margins are roughly 10% below 10% on a generic product.
Maharatnas and Focus Maharatnas and Maharatnas are all 35% range, and the gold range and below are 10% plus minus range.
What could have been the contribution of the revenues from the products which contribute below 10% gross margin, sir?
About 40%, 40 odd percent, 45%.
So we still have a 45% revenue, which actually probably is pulling our margins down. So,
yes.
And
we are tail cutting. Actually, we are trying to bring it down to 35% in the next fiscal.
Okay. So the reason for doing the business of these products is basically to keep the SKUs alive, or basically at the bottom line it does add something at a absolute EBITDA. I understand it may be lower, but yeah.
There is a continuity in the market. It is not easy to cut down a product upfront because there are inventories in trade, there are inventories in factories, there are inventories of packaging materials. So you have to plan the things and do it in next 2 years or 1.5 years. So we are on the verge. We are looking at about 40 products. I wish to take up more than 40 actually at this moment. So I had started that last year. So I think I should be successful in cutting down 40 products this year.
So what can be our target over next 2 to 3 years on these products, sir, the revenue contribution?
Which products?
I mean, the products which are contributing below 10%, which you are targeting 35% next year. I'm asking over the next 2 to 3 years, what is the target?
We'll go slow actually. So next year will be 35, then we target 30%. Hello?
Yes, sir, I'm there. Okay.
Yeah, 24 will target 35%, 25 will target 30%.
Okay. Sir, second is on our new product launches like CTPR and all, which are the completely new product and are seeing a huge demand growth in the market. So we have already got the registrations and we will be launching this product, and we'll be doing the B2B sales for these products, sir?
Yeah, we are planning to do that actually. So in February we'll launch our brand, and of course we are working with some partners. So we'll decide and close the partners also soon.
So we have got the registration, sir?
The launch is going to happen in February.
No, I'm saying the product CTPR product registration is in place.
Without the registration, I cannot do the launch. I got the registration 6 months back. I was sitting on it. I was working with the companies. I was trying to decide that how we have to proceed. So now we have decided and we are going to make the technical by ourselves.
So, sir, if I understand rightly, as of now, there are only 3 to 4 players like, Netco and Best Agro and GSP Crop who have got the product registration. You have also got the product registration almost 6 months back. So there are only 4 to 5 players who have got this product registration, and maybe the market is going to be pretty crowded. Do you see that in next year? And what kind of market share you think that or revenues we can garner from the CTPR in next couple of years? So
we have difficult to talk about the couple of years, but this year I would like to establish it as one of the key products. I have kept this in the top 6 products of our list. So definitely we'll be targeting a big number out of this product.
Where we will be in our competitive intensity on this CTPR, so we are completely fully backward integrated, or we are still buying some raw material from outside for CTPR?
Raw material definitely are going to come from China for everybody. So it hardly matters. So we are competitive with everybody and anybody. So it should be a good contributor to us because we are making our own AIs and own formulation. So we should be aggressive in pricing.
Okay. Sir, in our business of B2B, what is the revenue share right now? If you can just give that number.
B2B, exact number I'll just share.
Very broad number, sir. I'm looking, not exact number.
Roughly about 400 crores is something we have achieved so far. So net of GST. So another 70, 80 means will be roughly 500 minus in totality this year.
Okay, so far now 400 is B2B and roughly 100 is from the export. So roughly 500 crore is from.
I'm not talking about 9 months. I'm talking about 10.5 months now. Almost 10 months means. It's not a 9 month figure.
So roughly on an annual basis, it will be roughly, we can safely say that 35% revenue from B2B and exports and 2/3 is B2C.
Yes.
Yes. Actually, we are also on the verge of commissioning the new facility, and you have remarks mentioned that a strong opportunity and import replacement in B2B market. So where we see that our B2B business panning out, and with this 110 crore rupees investment, where do you see that our B2B business can go? What kind of molecule can pick up? And
if I talk this year, current year, we are targeting roughly about 500 crore B2B.
Yeah.
This year we can see a 200 crore jump in B2B segment actually. So B2B and B2C both I'll target 200 crore jump actually, and there will be a small jump in the export segment, which will be 100 odd crore this year. Next year we'll be targeting 200. So the target will be of roughly about 500 crore jump to 200, 200 and 100 roughly. So in totality, how it turns out 400 or whatever I'll declare in total, but roughly the broad target will be like that.
And so margin profile will be similar in B2B what we have in B2C, or I mean at EBITDA level?
At EBITDA level, this is more or less similar, because when you start selling the new generation molecule, the margins in the new generation molecules are better than the older generic products actually. So since the sales is going to grow from the specialty products only, so I believe that it will be more or less similar.
Fine enough, sir. So Rajesh, thank you very much for answering all the questions.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. To ask a question, you may enter star and 1. Participants, if you have a question, you may enter star and 1. As there are no further questions from participants, I would like to hand the floor back to the management for closing comments. Please go ahead, sir.
Yes. So I would like to thank all the attendees for attending this virtual session. We believe that we have satisfactorily run you through our company and business model and addressed every arising question thereon put upon the floor by the participants. We continue to see growth in our broad product portfolio and witness a strong momentum across our business, supported by R&D and backward integration initiatives. We remain focused on bringing new products, exploring new markets, and creating value for all our stakeholders. Please follow up with Investor Relations team, Vinayak and Naman from Captive AR if you have any questions which weren't covered up in the session, and hope you have a great day ahead. Thank you once again. Thank you very much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Insecticides India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.